Welcome to ShortView Trading, your morning market hit for Monday 19th of July. What matters today and this week for traders? Well, markets are really at a fascinating juncture. Having been super strong over several weeks, the cracks began to emerge last week. Look at the NASDAQ 100, for example, from mid-May through till 10 days ago or so, up 8 consecutive weeks in a row. That's the longest win streak it's had on a weekly basis, really, since early 2019, equaling that 8 weeks we saw in early 2019. But last week, those cracks began to emerge, and we saw that in the S&P 500, we saw it in the NASDAQ, the US equity markets, which have been the key areas of strength over recent weeks and months, whilst other markets have tracked sideways or even tracked lower in other parts of the world, whether that's Asia or Europe. So the center of strength, tech, the S&P 500, the center of global strength, started to show some weakness on Thursday and Friday last week. In fact, the S&P 500 was down 3 days out of 5 over the course of the last 5 trading sessions last week. The NASDAQ was similar, both indices closing down 0.8% on Friday on the day. And so it leaves us the real key question here. Are markets rolling over, or are they simply consolidating their price action, their moves in recent weeks? Indeed, look at, on the plus side, look at the S&P 500's price action in this GIP chart we're putting up in front of you now. Really range bound sideways since July, popping up into earlier part of the month and giving back those gains, but net back at a key support level where it's broadly been overnight, not quite tested it yet. The lows, the intraday lows from the 8th of July, a bit of a support level. We saw that sort of level in early July as well, as you can see on the GIP chart. So on the plus side, it looks so far as though they're holding those key levels, and added to which you can certainly look at one or two models, short-term market timing models on the S&P or the NASDAQ, and make the argument that they're starting to get onto buy signals. We're seeing, for example, if you look at the S&P 500's put to call ratio model, the model we're quite keen on, which works pretty well in short-term market timings, most of the time this is back on buy. So there are some plus points, but having said that, on the negative side, there's plenty to focus one's mind as well. Most particularly, it looks to us like models are starting to roll, momentum is starting to roll, and if you look at the NASDAQ, which has been the area of strength in recent weeks, as I said, there's a lot of downside potential there in terms of the short-term market timing models. Look at the NASDAQ put to call ratio, for example. It's eased off over the last couple of trading sessions, but it's mid-range. It's not yet on buy. As you can see, the red line in front of you, the 3-day smooth version of the NASDAQ 100 put to call ratio that we like to use, has moved lower, but not yet on buy, as I said. Equally, other models suggest that NASDAQ technical momentum is rolling over. And of course, there's been a lot of excess built up in the NASDAQ. So it's a tough call. It's a key question. Are markets consolidating, or indeed are they rolling over after several very strong weeks? And to see how we're playing this and our conclusions, please see today's Daily Rag available to subscribers on the website. Or if you're interested in a free trial, please click on the link below. Simply enter your name and email address, no credit card details required, and we'll sign you up for a 7-day free trial of the Daily Rag. So what are we watching this week? Well, there's a lot going on. We're particularly focused on US second quarter earnings. Tons of companies reporting over the course of this week, including the likes of Coke and many others, Twitter, for example. Over and above that, we've got a couple of central banks doing some important things. We've got the ECB on Thursday with their monetary policy meeting, and then a press conference hosted by Lagarde after that. Of course, given their recent strategic review of how they go about their monetary policy, this is going to be quite interesting, could be quite an interesting Q&A session as well. Over and above that, in China, there's the loan prime rate announcement, the monthly announcement. Of course, the Chinese have been easing in recent weeks, so will they do more on this loan prime rate? The consensus is not, but that's a key focus for market participants. And then in terms of macro, there's lots of US housing data out over the course of this week. We've got South Korean exports and imports, which is the first take on global imports in July. So interesting in that respect. They're a big global exporter, so they're a key barometer of that trade across the globe in July. And then over and above that, we've got some retail sales out later this week from the UK and one or two other bits and pieces. So that's it from us. That's your morning market hit for Monday, 19th of July. Thank you for listening. Please do subscribe to these free videos on YouTube. Simply search under ShortView Trading or follow us on LinkedIn, Twitter, and or Facebook. Thank you for listening. Stay safe. Trade well.